especially around tax season, we're about to go in a deep dive into all the tax implications and everything that you need to know to help you best maximize the benefits on your tax return. From student loan interest to forgiveness programs, we're going to touch on everything and help you get through this maze of information so that you're in the best place possible. Stay tuned.
Hello. Welcome to the next episode of Cigars and Taxes. It's your host here, Layton Smith, with my beautiful partner, Stacey Hoffler-Smith. We're partners of Hoffler-Smith Financial, New Jersey-based accounting firm. Our offices in New Jersey and Waterbury, Connecticut. And we're here today to talk about, what's the topic again?
How do student loans affect my taxes?
That's what we're talking about today. Yes. So we're here to have a conversation about how student loans affect your taxes while we're having some drinks, some smokes here in the beautiful Summers Point Cigar Lounge.
We are coming to you from Summers Point Cigar Lounge in Summers Point, New Jersey. Special thanks to
Steve and Jackie. And we're up here in the VIP lounge.
Yes.
Love those guys. Mm-hmm. So, before we get into all the good stuff, let's hit the real important points.
Sure.
What you drinking and smoking today while we start this conversation?
I have a margarita and I have my Patron. I like my Reposado Patron in there. And that's what I have in my glass. And I have a Tabac Especial. And this is one of my infused cigars. I really like the coffee mocha flavor of these. This is one of my favorites. Nice. I like the flavored cigars.
All right. Today I am smoking a EP Carrillo Pledge of Allegiance 2024 stick. I actually have not had this stick before. Steve Ortiz, the owner of the shop here, Summers Point Cigar Lounge, he loves these cigars. Told me to try one.
Does he? I didn't know that.
We want to see. We're going to see what it's really about. We want to see what it's really about, all right? But he gave it high praises. I haven't had a chance to go online and check the reviews and all that good stuff, but it has a beautiful wrapper. I love the name, Pledge of Allegiance. All right, I like this. All right. Good stuff. And I am drinking, this is Macallan 21 today. Oh. That's it. Just in case the stick is not pleasurable, the drink will even it all out. All right. So I know I just went completely overboard with the intro. But listen, we're going to have a good time with this topic today. We're going to take it easy. The goal of the show is to bring conversations we have in the cigar lounge to the regular world. What you got to understand is half the conversations we have in the cigar lounge, you're not ready for. We can't even do that on camera. But the other half, we're going to try to bring it here live. It's a very interesting thing. I'm just downstairs. There's a couple guys in the lounge, and we're having a conversation about the podcast. And the conversations I just had with those guys, which, one, we fell into a conversation where he was a employee, and he was made a 1099, wasn't given any information, and then that jumped into tax time and the implications. Mm-hmm. We're going to start bringing more live kind of episodes like that. So we're going to get all those jerks downstairs. We want to bring them up here like one by one, have little episodes with them in there talking, at least the ones that want to talk.
Yeah, they may or may not want to be on the recording.
We'll see.
But I think we can still bring those issues up because we get that quite a bit, though. There's a lot of companies that are trying to move their folks. That's actually not new. It's just, they're not informed.
So they get moved from an employee to a 1099 contractor, boom, boom. But today, I know I just stopped here. Today we're going to talk about student loan and the effects on your tax return.
Yes.
And then we're going to jump into all those cool conversations we'll be having downstairs later.
We may have to do that in another episode. Yeah. Let's look at our time.
That's it. Let's go.
Okay. All right. Really, we're looking at student loans, and specifically, we're going to be talking about highlighting how student loans work very broadly, and then how the IRS treats student loans when it comes to tax time. And then we're going to talk about a few other things, like what happens if you can't pay back your student loan and how that may impact things, some consolidation options and some tax implications of those, and some just regular real life implications of
those. Talking about like repayment and consolidation of the loans. than if they maybe default on the loans.
Exactly.
Yeah, all of that's not tax implications, but as you just said, real life.
Real
Yeah.
life
Okay,
implications.
got it.
So the thing is, to be honest, tax time is a certain portion of the year. And yes, whatever you do throughout the year does impact what happens during that small snippet of tax time.
That's true.
Real life is the rest of the year, all year.
Honestly enough, these same topics, consolidating student loans, taking out student loans for your kids, those are all conversations that we get into in the office with the clients.
Yes.
Even though that doesn't have a true tax impact at that moment.
Right.
But still, that's the point.
Right. And I think that's just the nature of what we do. And when we're talking with people about doing their taxes, about issues that they might be having, you can't help but talk about what's happening with them.
Sure.
You know, what brought this on, what you're trying to do, how these current issues may impact what's coming up next. It all ties in. So,
Yeah, a whole family conversation.
yeah.
All right, let's go.
Okay. So first off, student loan interest, the student loan, when you have it, everybody talks about, oh, I should be able to use that on my taxes. One distinction is it's the student loan interest. So it's the interest portion that is paid that you can use as a deduction on your taxes. So it's not the full payment. So often at tax time, we'll get people that say, oh, I didn't get that 1098 tax form, 1098E tax form, but I have all my statements.
Yeah, and it's like, yeah,
No,
we need the interest.
we need that form to actually indicate how much of your payments for the year were actually interest. And that's the portion that we can use. That also begs the question of, it's not simply that you took out a student loan, but that you actually have started
You're starting payments.
to pay it back. Until you do that, there won't be any interest to take.
Right. So the funny thing is, every year we get those questions where they come in and they're like, yeah, I heard Congress passed it so you can write off your whole student loan. It's like, yeah, no, that's not true.
No.
Ain't nobody said that. You just went to sleep one night and had a really lovely dream. Okay. You're not writing off your whole student loans. You get to write off the interest.
To be fair, it is a little confusing when you hear Congress going back and forth and the fights and all this other stuff.
Yeah, they put bills on the floor that might have those in there, but nothing has
Right.
It's not passed. You don't get to write off your student loan.
And I think people hear always the better version of what it would
But
be.
we got, listen, every time we have a new president, you got this. When we had Trump came in with the tax cut, job back, there was some confusion there about, student loans, we can write off the whole amount or it's going to be forgiven. No, then there was something also when Obama was in, when there was confusion there about the student loans. But either way, it's the student loan interest that you get to write
It is
off.
the interest portion only.
That's
yes.
it. And you can deduct up to $2,500
Yes.
of student loan interest. So
Key phrase up to
$2,500.
$2,500.
So if you paid $8,000 in student loan interest, you can deduct up to $2,500 of student loan interest. That's it.
If there's a situation where you were behind on your student loans and they took, I don't know, $15,000 from you from a tax refund or some other source, or I don't know, you have, like you said, $10,000 of it is interest, $2,500 at the most. Now that also depends on your income.
Oh, yeah.
Yes, because it's up to, you need to have a modified adjusted gross income of, it's 70,000 or 140,000 if you're married family.
So for individuals, the income limitation is 70,000. I think it phases out completely at 85. Yeah. So at 85,000, if you're over 85,000, your adjusted gross income, you do not get to write off the
As an
student loan interest.
individual, yes. Which puts you at 170 if you're married filing joint. You're over that as a joint couple, you don't get to take anything. That line will come up as zero no matter what you put in. So.
That's it. Yeah. So that's the phase out.
So you get the 1098E if you've paid $600 or more in student loan interest. Okay, so that sometimes those institutions will provide those even if you don't pay in that much, but they're only obligated.
Yeah. If it's over 600, they will. If it's under 600, then
Maybe
We
not.
have to.
Yeah.
But we normally still see those
I
1090
still
80s.
see them.
It's
Yeah,
like $150 on
I've
it, something
seen
like that.
them
Yeah.
with $20 on there, to be honest.
I have never seen that.
120, 35, yeah. And I'm
You
just
have
like,
an interesting group of clients.
and look,
I'm
it
just
is what it
just
is.
messing, just
It
messing.
is what it is. There are loan forgiveness programs. So that's this is what I think on my third point here. There are loan forgiveness programs for individuals that go into public service. And it's specifically called a public service loan forgiveness program. I believe there's others, but
PSLF, right?
Yes.
PSL, Public Service Loan Forgiveness.
and the forgiven amount is not taxable by the IRS. Your states may tax it, depends on your state.
That's true. So right now, I think, so with the PSLF, that forgiveness for loans, if you do so many years of service, and
Yes.
I don't know the complete ins and outs of that.
But ins and outs, but I do
it's
know
just-
people who have reached out to us and said, hey, I got that letter, and they've been in service for 10 years or more.
They've been a teacher for 15 years.
I have
And,
a friend of mine
the
that's been a
last-
cop for 10 more than 10 years, and she graduated with me. So
Wow.
yeah, so
That's a long time ago.
okay.
So-
ask
so
you
wait
all
a
that.
minute. Wait a minute.
we didn't ask
she,
you all
so she
that.
paid the student loans for 30 years and then they had the balance
She
forgiven?
didn't- honestly, it wasn't just now. I feel like it was probably 10 years ago that she told me that.
Okay, I'm sorry.
Yes, but
I'm sorry.
Oh
Oh my God. It's one of those things. It's like, ooh, I've been paying the student loan for 30 years. Now the last 10% of it just got forgiven.
Which is probably all interesting.
Oh my God. It's
definitely.
hilarious. It should be refunded to them.
Yeah.
But
yeah, particularly going into public service, because when you go into public service, a lot of times the salaries are less, the benefits may be more consistent and
That's
steady,
true.
but the salary is usually less. That's why it's
a
more of
love
thing.
for service. It's a
is.
love for service.
It is.
God
It
bless
is.
all.
It is.
Yes.
It is.
So now it's forgiven completely federally, but right now there's 4 states: Indiana, North Carolina, Mississippi,
I
and
wrote them down.
Indiana, North Carolina, Wisconsin.
Yes.
So Indiana, North Carolina, Mississippi, Wisconsin. If you have loan forgiveness, so let's just say they forgive $100,000. All right, boom. It's not taxable federally, but on that state, that 100,000 is, I haven't seen one, but it is included as income.
It would be included as income, assuming, and to be fair, I don't know the specific rules. I just know that there's at least a portion of that.
So here's the thing.
That's-
What we need to find
that's-
out is, does that come on a 1099-C, a cancellation of debt?
I don't know.
That would be interesting. I am
Or just
assuming.
a regular 1099 miscellaneous? Maybe.
No, it wouldn't be that. It has to be, it would have to come on a 1099-C, a cancellation of debt.
Maybe.
Yeah, have to be. It couldn't be on a
That's all right.
1099 because then you'd have that whole issue of self-employed tax and all that jazz. So no, it wouldn't do. It has to be a 1099-C.
Honestly, for the individuals that where it's come up for me, that's in the that's our client base, they have not gotten.
They haven't
tax
received it. That's true.
They didn't have. There was
So
no. Tax
you know what?
for
I
it.
think we're sitting here overthinking this. So the clients that we have that have forgiveness, I have a couple through the years that had that. They didn't actually receive
they didn't get a
anything.
1099 at all.
But we also don't have many clients we have clients in North Carolina, but Indiana,
Not that it
Wisconsin,
had that issue. That had that.
Mississippi.
No. Yeah.
So, moral of the story.
Check
If
with
you-
your tax accountant.
Yes.
When this comes up, particularly if you are in the states of
Mississippi, Wisconsin, Indiana.
Carolina.
The other
Yes.
note is this. You're about to have $100,000 forgiven, and you know you're in one of those 4 states. Move. Get out right before it's forgiven. Nah, I'm joking.
It might not
Everybody
be
go to
that
Florida.
easy.
Everybody go to Florida.
Texas. Or,
Oh, God.
yeah.
So that's the thing. When we say
Florida's more
move,
fun.
it's like I always say, everybody go to Florida. And Stacey go, Texas.
And it's in there too.
That's
It's
true.
in that list too.
That's
So,
true.
With Florida or Texas.
Okay. All right. But
Personally,
we'll figure it out. But that's a good point. I think we're going to come back and maybe not have another episode, but maybe a little blurb where we can add on to the end of this
Yes.
that will talk about how do you deal with that with the states? Because I've never had that situation.
Right.
I've never seen when the forgiveness comes back on a 1099-C. I just know that they got a letter that it was forgiven, and that was it. So,
Take a
with
look
that
at
being
it.
the case,
Yeah.
that's good
Might
stuff.
take a look
Good
at it
stuff.
and add something on here just as an FYI.
That's true.
Guys.
That's true. That's true.
Okay.
All right.
My next point is tax implications in the case of default. So technically, on the tax return, there is no implications.
Yeah.
And just to clarify, default is a status where you're supposed to be making payments on your student loan. You're going through whatever scenarios where maybe you had it deferred and whatnot, but now you're in the state where you're paying monthly. And for whatever reason, you stopped paying monthly. And it goes on long enough so that they reassign the status as in being in default. When that happens...
Oh, my God. She is so lovely, isn't she? All right. So what she's saying here is this.
Why can I... Okay.
You keep getting this bill in the mail that says you owe $800 a month on the student loan, and you go, bruh. Bruh. I ain't even making 800 a month. I'm just going to put my hands over my ears and my hands over my eyes, put my head in the dirt. Yeah. And after what, like a year of not paying?
It's a good amount of time.
Like a year of not paying, it defaults.
It defaults. But at that point...
We're not laughing at folks. We're not doing that.
Just, really? Because that looks like that's exactly what you would do.
You're just dancing around this default thing like you got a job and you've been trying and you've been struggling a little bit. And now you're unemployed. And now this little thing of default just shows up here. And it's like, what is this? And it's like, bruh, come on. All right. So they defaulted on the loan. Yes. There is no tax implications of defaulting. I think that the only thing that really happens is you default on a loan and the IRS becomes a collection agency. So you have refunds that are coming. Whatever refunds you have coming, because you have defaulted on that loan, the IRS is going to offset those refunds. They're going to take the refund and apply it to your loans that are in default. Now, all that being said and done, there's always a plan. There's always a way to fix and come out of the situation you're in.
Right.
If by chance, unfortunately, you defaulted on your loans for whatever the reason might be, those are federal loans. You could always go into a repayment plan to reestablish the loan. Right. I don't even think it takes that long.
Get it out of default.
Get it out of default. It's like you make 6 monthly payments or 12 monthly payments. Yes. You can go on income-based repayment loans. So depending on how much you make, that will determine what your monthly payment will be. You know, if you have 6 children, you're making $70,000. They might come back with your monthly payment is $80 a month. Right. You make those payments, you owe $120,000, you're paying $80 a month. You make 6 monthly payments or 12 monthly payments. Right. It comes out of default status. The IRS is no longer offsetting
any refund.
There's always a way. There's always a plan. All right. So we're not coming down on folks or coming at folks. Just try to say, if for whatever reason you couldn't deal with the situation while it was happening, you're not stuck once the loan is in default. Right. You can go through the repayment efforts. You can just reach out to whoever the loan servicer is.
Yes.
But there's no tax implications.
That's the only tax implication, is that you won't see your refunds until that's paid off.
So it's only the federal refunds that's offset.
I believe it's only the federal.
Is it just, I don't think I've seen it where your state get offset for that, but I'm pretty sure that's probably the case with certain.
This is the thing. Generally speaking, and I would have to check this, but general rules with IRS offsets is if it goes for a period of time, they can ask for, contact your state to say, hey, but I don't know if they do that for student.
No, yeah, that's for IRS. That's for federal debt, where the IRS can try to offset the state. But this is just federal loans.
Right. This is not IRS tax debt.
That's it. Right. So they're going to offset the federal. Let's just leave it at they're going to offset the federal. Yes. And there's a question mark of whether or not the state can be offset. Yes. But they will definitely offset the federal if you are in default.
Yes.
So there's no tax implications of being in default outside of the IRS becomes this really amazing collection agency.
They have their hands in everything. They got your social.
That's it. They got your social.
They got your social. So boom. And then, anyway, the other thing is, if you're looking at one of their repayment options, there are times when it may be useful to, if you are for married filing joint couples, to two things. One, it may be useful with the repayment option to file married filing separately when you might, if you're used to filing married filing joint, that might be something that's a lot different.
Jump into that a little bit.
Okay.
Why would you file married filing separate?
Because with the repayment, and we've had several clients come in with this.
You're talking about income.
Yes.
The income. Okay.
The income would, because the repayment amount, and notice when Layton was just saying in his example, let's say you make, what'd you say,
70,000, got 6 kids, and they're going to determine what your repayment amount might be. It could be $80 a month, something small.
Exactly. So the thing is, if you're married filing joint, maybe your income is not 70,000, it's 140,000. And so they're going to make you have a higher repayment amount.
So basically, so what we're delving into right now is more of Stacey's wheelbarrow, which is the tax planning piece of this. But you really have to take a good look at their situation, them filing joint versus filing married separate, because there are deductions and credits that you're not allowed when you're married filing separate. You're going to lose certain things as married filing separate.
Yes.
So let's say you have young kids.
Right.
That might not be the best idea. You would need to look at both the returns as married filing joint and married filing separate.
See what you gain, see what you lose.
Right.
That's something you would definitely, which is why I said you may want to consider. It's something that in most cases, if you're talking with one of those repayment officers, that's something that they bring up. And when they do, and the reason I know that they do is because several of our clients have come in and said, hey, this lady on the phone that's helping me with my student loan says I might need to file married filing separate. I've spoken with them directly, and we've had a little three-way conversation, and I would go back and do the numbers so that the client can really have a good idea of what they're losing and what they're not. Some of the credits that you typically just totally lose whenever you file married filing separate, they may not be relevant for you.
True, if you don't have young children.
You don't have young children, you don't have a rental property.
You're dealing with schedule. But just to bring context to this, what we're really saying here is you have somebody who's in default. Okay. And they want to go on a repayment plan. And their joint return, let's say, is $300,000, all right? But one spouse makes $240,000, one spouse makes $60,000.
Right.
The spouse that makes $60,000, loans are in default. So they want to file a married filing separate return because their repayment plan is going to be income-based. And if they are filing a married filing separate return showing only the $60,000, the repayment amount is going to be substantially lower than showing the $300,000.
And meaning the monthly repayment amount.
But what you have to look at there, you need to talk to your financial advisor here, okay? Because you need to have the numbers run.
Yes.
You need to understand as a family, you're filing married, filing joint. When you separate those returns, what do you lose by having separate returns? Yes. And what you're losing here is the benefit worth it for having that payment cut in half monthly to student loans.
Yeah.
Wow. We just jumped into a whole lot right there that ain't got nothing to do with tax applications.
Actually, I said some of this was going to be real life stuff. I have one other thing that is semi-tax related. Okay. And it does have to be a refund. Yes. So, okay. So if you are, so another situation might be if you are married filing joint, there's a default on one of your student loans. It may be worth filing.
And your spouse.
Yes.
Oh, yeah.
Yes.
Oh, we are jumping in the weeds here, boy.
Sometimes that is an option. Listen, we are the people that find a way.
I know.
And give the option. So I'm doing it.
Listen,
okay?
We're just talking about these scenarios that popped up. And I'll be honest with you.
Yeah.
I am enjoying this 21 Callan very, very much at this moment. Okay.
Yeah.
And to be honest with you, this EP Corolla, this Pledge of Allegiance, this is a very good stick.
Oh, so he was right.
Yeah, I don't know about Steve.
Come on, give him the credit. Give him the credit.
Listen, he owns the lounge. It's all right. You got to push stuff.
And he's got a whole humidor, but he shows you he selected that one and said for you to try it.
The rep might have been downstairs at the same time. I don't know.
He wasn't downstairs.
But this is actually a very good stick. So I'm glad I got a good steak and a good drink, because this right here is, I thought this was just going to be a straightforward, little simple topic. I figured it was going to be in and out 10 minutes. I thought this was going to be a little quick episode.
Listen.
Man, we jumping into default, separating returns, income-based repayment plans.
Once again, these are tax topics, but there's real life stuff that comes up too.
This is
And
true.
I think it's useful when our clients come to us, they're looking for that real life information.
Yes, we are their financial professionals. We're their therapists.
Okay.
We're their attorneys.
We do keep a box of tissues in each.
Stacey keeps a box of tissues.
You do too.
That's for me because I have allergies. Okay. Listen. Okay, we're gonna jump off topic real quick. We're talking about these tissues. When we moved and we moved into a new office, and we were decorating the new office.
Oh, okay.
Here we go.
There we go.
And we were picking out furniture for our individual offices. Stacey comes to me and she goes, "Listen, I want you to have an open mind." In typical Stacey term, you need to have an open mind right now. Okay.
I didn't go through all that. I
So
just told you I wanted a couch.
So what I'm thinking about doing is putting a love seat in my office.
Yes.
And I sat there and I looked. And I'm like, okay, so you already have these 20-minute appointments that run like an hour, 2 hours, because you talk to these. They love Stacey. They love Stacey. She's just in there rapping to them forever. I'm like, we're losing money. Anyway, that's a different conversation. But I'm like, so now I'm going to walk past your office and see some jokers laying there with their feet up on the love seat with some tissue, wiping their eyes while you're sitting there trying to pull them back off the edge.
All right.
Oh, no. We need to have a partner meeting so we can vote this down.
No, we don't. I'd probably see, now I feel like I need to mention my other hat.
No, okay, we want to stay. Let's jump back on topic.
All right.
We did not put the love seat in Stacey's office. We just kept regular chairs, uniform throughout all the offices, so no love seat.
I don't know that I'm appreciating this kind of sarcastic tone that I'm feeling, that energy. I don't know.
No, it's all love, Stacey.
Feeling that. Mm-hmm.
It's all love.
Yeah.
You love those clients. You care for them. You want them to be comfortable in a nice, comfortable setting while you're going through all these life changes and how to plan around it.
Are you good?
Yeah. I got it. All right. Come on.
Please be done. Oh, God.
Let's do
it. All right. We're done. We're done with this topic. Yes.
Oh, okay. We're doing all this extra talking, but we're done. Wow.
That's actually a wrap on our discussion. I'm hoping that you've walked away with a clearer understanding of student loans and how they work, how they impact your taxes, how they impact the after piece, how any different options that are there, so that you can make better decisions, more informed decisions about what's going on, with the repayments, potential consolidations. The more, the better. Knowledge is power, and it is helpful to have these little nuggets of wisdom.
That's it. So
earlier rather than later.
That's it. Mm-hmm. All right, so listen, thank you guys for joining us again today. Once again, this is Cigars and Taxes, is meant for entertainment as well as information. Any of these topics that might be relevant to you and your situation, we advise, please talk to your financial professional. Please talk to your EA that you work with, your CPA, your tax attorney. Get direct information. This information, make sure it's relevant to your situation.
Exactly.
All right. If there's any questions, you can always reach us at info@cigarsandtaxes. If you like these episodes, please hit the subscribe button. We have episodes coming every Thursday.
Also, comment below. We love feedback. Yes. So please give us a comment, and that helps us out.
True. And if you think we missed anything or there's something else that you want to hear on this topic, comment. We will reply to those comments. Send us an email. We thank you for all the time.
Yes.
And next episode, remember, was Cigars and Taxes. So when you sit down and you listen to us, you turn on YouTube, you're going to watch us. You need to have a cigar in your hand. Mm-hmm. You need to have a beverage, preferably something brown.
Okay, that is debatable. Okay. But, doesn't need to be brown. But a stick is good, and a beverage.
There you go. Thank you, guys. We will see you next episode.
Till next time, guys.